Assalamualaikum and hi everyone. Welcome again to my channel. If you are looking for a tutorial video on how to prepare financial statements for publication in accordance with the requirements of the relevant acts and also with the relevant financial reporting standards, this is the video. And we are going to prepare the financial statement for the purpose of educational learning. This is for the case of a company called Motion Lifestyle, and this company has a year end of 30th of June 2016. So let us look at what you have here, where you are given a trial balance here with the information as at 30th of June 2016. You will see that the requirement here asks you to prepare the statement of profit or loss, statement of changes in equity, statement of financial position for the year ended for all the year ended 30th June 2018. And of course, statement of financial position is at a point of time 30th of June 2018. You have to prepare also only one note, which is to the PPE, right? Let's start. First, what you need to do is to look at this requirement. After we have looked at the requirement, we have to go and classify these items given into expenses, income, asset, liabilities, and equity. These are expenses, these are asset but non-current asset. Directors fees expenses, audit fees expenses, rental if it has a debit balance, that was expenses, interest expenses, dividend received, so that is income. More specifically, this is other income. This is actually investment income. Okay, this is going to be your investment income, not other income. So you have commission paid to salesman, so that was expenses. That would be expenses. Staff salaries expenses. Bank, it is a current asset, non-current asset, the PPE, which were given separately, but for the purpose of writing notes, you need to show them in columnar form, in a form suitable for the disclosure purpose. So we have been given the accumulated depreciation for the two PPE. That was the negative asset account. So this is actually non-current asset, but this is negative non-current asset. Then you have accounts receivable, current asset. Accounts payable is a current liability. Tax paid is your expense you have paid in advance for the tax, and you have to check what was the tax expense. 7% debenture. This is your non-current liability. This is your equity, and this is the negative current asset for your accounts receivable. Right, so your accounts receivable, this is the contra asset or negative current asset. Retained profits given there was before the adjustment that you have the additional information. So this is equity, and interim dividend is also a distribution of equity, which is distribution of retained profits. Let's look at the first information. You have the information number 1, where that has not been adjusted in the company's books. So on 28th of May, so if you look at the year end, the company year end is 30th of June 18. So here you have 28th of May 18. What you do is you acquire a motor vehicle. So there is a new acquisition of motor vehicle on this date here. So this is the current financial year end. So the asset has been with you for just 1 month. So if you look the company years, the beginning of the year starts on 1st of July 17, right? So you have the motor vehicle purchase. You are informed the initial cost was 90,000. That was paid by check. So this will involve on the date 28th of May, debit motor vehicle, credit bank. It's 90,000. Okay, that one has to be shown here in the as of P in your current asset. You need to go and remove, minus. And for the motor vehicle, this needs to be shown in your notes later, in the PPE notes, yeah, PPE. And then later it will be shown in the statement of financial position as part of the carrying value. So here you have the information on depreciation. So we're going to calculate the depreciation as we do the workings for our depreciation. Since depreciation, you are informed what is more important is it was monthly basis for motor vehicle, and for the machinery, that is yearly basis, and that was reducing balance method. So it means that it will be depreciated on the carrying amount. For motor vehicle, that was straight line method. It will be depreciated based on the depreciable costs. The cost here, you have to take into consideration if there is any residual value. Bear in mind that is monthly basis. So meaning to say that even if you have a new acquisition here, that acquisition was just for 1 month, for the motor vehicle, you still need to provide depreciation charge for this motor vehicle that was newly purchased. And the depreciation expense will also include the existing motor vehicle at the cost. Right. So for the machinery, there were no new acquisition of machinery. So that you are going to provide the depreciation based on the carrying amount or the carrying value, which is cost minus accumulated depreciation. So we're doing that. And you are informed that motor vehicle will be treated as selling and distribution expenses. So this would be at carrying amount, as I said, cost minus accumulated depreciation. And this would be part of expenses. So we'll be doing that in our working section. And for those things, we are going to, after we have got the workings, we are going to go and debit depreciation and credit accumulated depreciation respectively to the account, which is motor vehicle and machinery. Here also the same, motor vehicle and machinery. But we need to go and calculate. We'll do that in a short while. Now we look at number 2. Number two is on inventory. Now remember, inventory should be measured at the lower of cost or at the net realizable value on its subsequent measurement. So here, if you look inventory at cost as per given in the trial balance, you have the inventory to be 681. That was inventory as at 30th of June 2018. Right. Then you are informed inventories checking had found that 30% of the year-end inventories, meaning that the 681,000, which is the cost, can only be sold at 150,000. So this is the net realizable value. So the cost of the inventory, if you calculate the 30% from that 681, you will get 204,300. So now you can see that the cost is higher than the net realizable value. So inventory shall be measured at the lower of cost and NRV. So there is a need to write down the inventory from cost to the NRV, and that would be 204,300 minus 150. And that will give you 54,300. Take your calculator and calculate. Right. And this write down will have to be adjusted by debiting the cost of sale, which is in your SOPL, and crediting your inventories. This will be done in the statement of financial position. How much? With 54,300. Okay. I hope you are okay. Okay. Now, let's look at the next one, which is the item number 3. Item number 3 is on revaluation of land. So here you have been given the fair value of land, and this is a non-depreciable asset, land. So you just need to go and debit the freehold land and credit the asset revaluation reserve for the freehold land. How much will that be? It would be taking the 16 million, taking the 16 million, which is the fair value. This is the fair value. So fair value 16 million minus the carrying amount. So 16 million minus carrying amount. Go and check your carrying amount. The carrying amount is in your statement or in your trial balance. This is the one, 14.5. There is no depreciation needed because this is non-depreciable asset. So 14.5 million, and that will give you 1.5 million. This 1.5 million will have to be adjusted in your other comprehensive income and also in your asset revaluation reserve in the statement of changes in equity, as well as later to be shown in your notes to the PPE. So 3 places that you need to ensure you do it. Okay, right. And at the same time, the carrying amount of the freehold land will increase. Next, we look at half-year interest that is still outstanding. So this is actually accrued interest. So there be interest on debenture, IOD, credit accrued interest on debenture, right? Half-year interest, you need to go and calculate how much is half-year, since the interest on debenture was 196 and you have 7% debenture from 5.6 million. So go find them and multiply that with half. So 5% times 5.6 million times half, you get 196. Include this in the finance costs. Yeah, this is in your finance costs. Include the accrued interest on debenture in the current liability section. Number 5 is on impairment of trade receivable, where you are informed one of the amount owing, which is the trade receivable of 2,000 was written off as bad, so to be written off. So, and therefore the allowance for impairment is to be adjusted to 1% of the account receivable. So meaning that the estimated credit loss is 1%, and that would be 1% from the account balances at the year end. So meaning that this has to be considered to get the ECL as well. So if you look at the accounts balances for the trade receivable here, it is 1030, the one here, right? So you take that times with 1030, and then you deduct your 2,000 because bad debts has to be taken off. Okay, then you get your figure to be, if you take your calculator, you will get that as 10,280, and then this is going to be your allowance for impairment of trade receivable carried down balance. If you are aware, much earlier you would notice that there was this 2,500, which is the balance at the beginning of the year. So therefore our task is to find actually what was the amount to be written off 10,280. I just erase this. This was the expected credit loss at the end of the year. This was the one beginning, this one at the end. And remember, there was a bad debts. The bad debt was 2,000. Right. So therefore you will have noticed that here this will give you 500, and you would see that the increase, there is an increase in the allowance if you compare 500 with 10,280. So the increase in allowance is by, if you take 10,280 minus 500, you will get 9,780, and this 9,780 is the impairment loss. So you have two things to do, which is first to find the what is the expected credit loss? We have already found it, which is the figure 10 to 80, and later find out what is the charge for the year to be shown as expense or as other income. But here it was an increase, so there would be an impairment loss of 9780. This will be shown under expenses, admin expenses. Right. Now we have number 6. Number 6 is very easy. It's bonus issue. I will also talk about that in my workings when I'll be doing things relating to statement of changes in equity. Remember, bonus issue does not involve any cash. Just recall your journal entry that you will have to just retake the retained profit since you are informed retained profits are being utilized. So we'll be doing that, and later that will increase your share capital. So we have to do that in our next part. And this is the proposed dividend, 5%. We assume this is actually 5% final dividend because there was this dividend that has been informed in the trial balance, that was the interim dividend. So interim dividend, you need to include them in the statement of changes and equity. So does the proposed final dividend at the beginning of the year. That means here the dividend is going to be calculated based on the ordinary shares before the bonus issue in number 6 took place. So this is as at looking at the shares held at the beginning of the year. We'll do that in a short while. Number 8 is on tax, and tax expense was 150, so debit tax expense. This is the one that will go to the shopper, 150, and you will have to go and credit tax paid. Since there was a tax paid that has already been paid, so you need to go and close the tax paid account, offset them, 186. The figure here, this figure, 186. So 186 here, and therefore you can see there is a difference of 30,000. If I'm not mistaken, let us check what is. Just take your calculator. 186 minus, it is 36 actually. Okay, that would be debited to tax recoverable because you have paid more than what you are being charged for. So you have paid 186. Now you can you have the tax recoverable of 36, and this would be your current asset, and tax expense will be in the shopper. Okay, then let's look at our statement of profit or loss and put all those things there. Okay, first start with sales and cost of sales. So if you can see here, okay, we start off with sales, right? So you just take the sales figure there that was given in the question. The sales figure, if you check the question, this is the sales figure, which is this figure, 6750. Let me take a different color. This one, 6750. Right. Next, you will have to take and make adjustment to the cost of sale. Remember earlier on we have done the adjustment for the write down, and I'm now repeating the calculation here for the write down. Remember our figure much earlier was 54,300 for the write down. Let's see, where was it? Yes, this one, the one here. Right. Now we will get our gross profit. Then we will proceed with that. If our workings, our admin expenses, and our selling expenses. There are no other income. If you have other income, include that. And what you will do is you will get profit from operation, and I'm now going to show you 3 workings straight away: admin, distribution, and finance cost. This one is at the bottom here. First one is to take what was given. So first I'm doing things on depreciation as I promised. Remember information number 1. So let's start with that. The first one is for machinery. So the cost of the machinery in the question given is 320. No changes to the machinery, no new purchase, no disposal. And you have the accumulated depreciation 196. Therefore, that was deducted because this is reducing balance method. So we have to take the carrying amount times 50%. And remember, this one was actually yearly basis. Recall what you have read here. Then do for the second one. The second one would be for motor vehicle. For motor vehicle, first do for the existing motor vehicle, which refers to this one, and then take into consideration the newly acquired motor vehicle. So this is the new one, this is the existing one. So for the new one, we are going to use the proportion of 1/12 time apportionment in the current year. However, for the old one, the depreciation will be charged for full year since it has been purchased somewhere in the prior period. Okay, let's do that. So here, so the new one will still use at cost, right? This is the initial cost, right? And then you have 10%. Here you multiply by 1 year, because this one is for the previous one existing, and this is going to give you all together, that will give you total of the total here, it will be in under the distribution cost of 13,000. The total will be 13,000, right? Next we go on doing our next one, which is other things which need to be included under our admin expenses. So let's look at that, and also add in the selling. Okay, you have here audit fees, directors fees. So here has been, we have done rental, and commission is actually expenses, but this is selling expenses or distribution. But we are going to also take this staff salaries, but remember this is different, this is distribution, and these things are all going to be this these will all be under your admin. Let's go, let's put that here. So we will just hide this for a while. Okay, salaries, directors fees, and audit fees, these are the things that you need to include. And one more is rental. So let's look at the rental part. Right, the rental is here. Okay, so rental, no adjustment. Audit fees, there are adjustment for the rental. No adjustment at all for all this, except for the adjustment is just for the interest on debenture, which is under your finance costs, right? Then you have your next item. Remember, we have calculated the impairment for the receivable, which is the impairment loss. There was an increase. And the last one is our commission, because commission was paid to the salesman, and take into consideration there was some prepaid commission or overpaid commission that was in number 4. Overpaid commission. So overpaid commission is the one that you will debit prepaid expenses and credit commission expense. So that is going to be your current asset. And let's do that. Commission that you will show here is not 48,500, that would be 47. Done with that, now you get your item total, that 670,880, 60,000, and 392,000. Those will all be included under the SOPL. But bear in mind, for the interest on debenture, it also includes accrued interest as per information number 4. Go and refer to this information that we referred earlier. So let's look at what we have done. All right, so now we proceed with investment income. Remember, I told you earlier about the dividend. This dividend received here is done with that. Okay, right. So let's look at that. Inventories, we have already taken into consideration. Receivable, yes. Payable, not yet, but the allowance, yes, we have also considered that. Tax paid as well. So let's look at our investment income. Then you have your profit before tax. After that, your taxation, as I mentioned, should be the tax that was given in the information there. That was tax expense. Then put your profit after tax. The surplus should be put under other comprehensive income, and the total comprehensive income would be 4902820. Done with that. So now let's look at our statement of changes in equity. Our statement of changes in equity will start with our first item, which is the balance at the beginning. So balance as at 1st of July. Then we put the profit for the year, or profit for the year, also known as profit after tax, right? Profit for the year or profit after tax. Then we will consider um, our surplus on revaluation. Our surplus is here. Sorry, that was a dividend. Never mind. We just do the surplus first. So let's just put all there. Surplus, first information that you have. Remember, we go and credit asset revaluation reserve, and this is related to land, right? Next is your item that will be your dividend and your bonus issue. We start off with dividend. Dividend, if you see the information given, there was interim dividend. This is from the trial balance. Where is it? It is from here, 125. And you have information on dividend here, proposed dividend. So I promised that I'm going to show it here. So I'm going to show it here. Final dividend was 5% from 30 million. 30 million here refers to the share capital amount. This one. Right? So dividend. Next is calculating it. You will get the amount that was deducted in your retained profit. Dividend is not under ordinary shares. Dividend are from the retained profit. And the last one is going to be bonus issue. Let us look at the working for bonus issue that I have prepared here. So first you are informed that bonus issue were being declared to be 2 units of bonus issue, 2 for every 1,000 units of shares held, and it will be 2 out of 1,000 from this 20 million. And that you need to also calculate what is the fair value of the bonus issue. To do that, first you need to calculate what is the bonus issue. This is number one. Do this. Then you need to go and estimate the fair value. How do we estimate the fair value? We take the share capital amount and then we divide with the number of shares after the bonus issue. Number of shares after the bonus issue would be 20 million, the one in red here, plus 40,000 units. So before and after it would become 20.04 million. So that will give you 1 ringgit and 50 cent per unit. So you will take that 1 ringgit and 50 cent per unit. Yeah, this one. And that will be multiplied with 40,000 units of bonus shares, and that will give you 60,000. The journal entry will be debit retained profit 60,000, credit ordinary shares 60,000, and that will be here. Okay, one is being deducted, another one will increase. So this is the one at the end of the year. This one will be shown in the statement of financial position as share capital, and these two will be total up and shown in the statement of financial position as reserve. So this will be reserve. So the total of that will have to be shown in the statement of financial position. So we are going to now start with our statement of financial position, and we can start with the PPE. We start with PPE. We will do that later. We'll just settle our items related to investment. Investment is in number information here. Let's just check where is the investment. Here is the investment, no changes to the investment. So the PPE, we will be doing that in our notes to the account. Now let's do this first. The current asset. Inventory reduced with the write down. So this is the amount that you show at the net realizable value. Next is the receivable. Make sure that is at the net realizable value as well. And then your bank, that should take out the acquisition of PPE because we credit bank earlier. Your tax recoverable, and also the prepaid commission expense that I mentioned much earlier. Okay, then you have your item here, total for the first part, but I have not yet shown you how to get the PPE. But let me just reveal the figure for you, and then we will see how we calculate that. Start with the finance part, which is equity and liability. Show your share capital and your reserve. Bear in mind, this is the figure here, figure that we calculated much earlier, right? That was the one here, the total of these two for the reserve. For the share capital is the figure here, right? Next is the non-current liabilities, no changes. Okay, let's just reveal the figure there. So 5.6 million. The total here should equal the total from these three, and it should, I'm also, perhaps you can do one more column for the total. Next, we will be doing the current liability section. Current liability, accounts payable. Remember, dividend payable, that was an accrued dividend or dividend that were proposed but was not yet paid, so that is a current liability. Here is where you go and debit the retained profit, and you go and credit the final dividend. So when you do that, that will reduce the retained profit with the final dividends. The one that we were talking is the one here, and we will credit the current liability, dividends payable, that was 1.5 million. We earlier calculated it here, this one. Okay, this is the one here. For the debenture interest, that was the debenture interest that you have in the working section, which is your working section here. Let me show you this one. Yep, so that should be included here. Okay, done. So let's look at the PPE and see how do we get the carrying amount or carrying value of 16,248,900. Let's see that. Start with the template first. Make sure you have three types of asset here, which is classification: freehold land, machinery, and motor vehicle. I'm also including one more total column here. First, put the cost and valuation. Start with the balance. Put the accumulated depreciation and also start with the balance. All right. Then after you have done that, go and put the addition that you have done for the motor vehicle. Okay, when you add that, you need to go and also add into your motor vehicle when you debit. So therefore this would be 90,000. And then remember, there was a surplus for the land. You go and debit freehold land and you credit the ARR freehold land, and the total at the end of the year was what you can see, 16,320,212,500. That was the total cost and also the valuation. Which one is at valuation? The freehold land is at valuation. The machinery and the motor vehicle, they are all at cost. Freehold land is reusing revaluation model, so you should put here cost and also slash valuation. Next one is to do the calculation here. We have already done the calculation for depreciation much earlier. Where do you take all this? These are all from the working section. Working section in our, I'm putting gray there, right? Here, this one. This is the one. Yes. But the total is 31,600. And the accumulated depreciation at the end of the year, there are no disposal charge whatsoever, no elimination, and this is going to be the carrying amount at the end of the year, the total by column, and the amount here is the net carrying amount, net carrying value, that you will show them here in the statement of financial position. So we are done with the preparation of a statement of financial position, statement of profit or loss, and statement of changes in equity, together with the disclosure notes on PPE, that was the notes to the account that relates to PPE. With that, I thank you for watching. Go and practice more to get better each day. I'll see you when I will see you. Till then, have a pleasant day ahead. I will see you again. Bye bye.